All right, sign of weakness principle 3. No result from effort. We just saw a little example of this. This is going to be very easy to explain. This is known as no result from effort. Any indication of strength in an uptrend, you should expect a strong market. If the next bar is down on a wide spread closing on the lows and the low and the close is lower than the previous bar, it's called a countermanding signal. You don't fight the market, but you have to assume there has been no result in an effort to rise. Therefore, the market must be weak at that time. If the original indication was genuine sign of strength, that means SOS, by the way, let me be clear. SOW is sign of weakness. SOS is sign of strength. I should have made that clear at the beginning, but just to be clear. If the original indication was genuine sign of strength, then professional money would immediately move into the market, giving higher prices, not lower. Now, Philip, we look at this stock of Baidu, okay, which is a really good example here of how we get no result from effort to rise. Could you just have a look at that and explain what's going on here on that chart?
Well, on the first bar, which is the very high volume bar just to the right of the text box, which Gavin is highlighting there, you've got a push up. There's an effort to move upwards. You've closed yourself to the highs, but you've got ultra high volume in there. But notice what happens on the next bar. The next bar has tried to move higher. There's still a very high volume on there, but it's ended up closing near the lows. Now, for that to have been buying in there, it should have been a wide spread up, closing up towards the highs. The fact it's gone up and collapsed down towards the low shows that the supply or the selling coming in there must have overtaken the buying that was present on that bar. So the market just is going to struggle to get up anywhere through that area, because it would then require huge effort to penetrate that.
And look what happens. We then get an immediate test of the supply, and it knocks the market sideways. They're trying to probe here to see how many sellers are around. It goes up on a no demand bar, knocks it down, goes back up. There's your upthrust. Look on low volume, and that's when the whole thing collapsed. So you had all the principles on this chart.
All of them. Yes.
The reason I wanted to highlight the signal here is to talk a little bit about the dialog boxes in the software. Some of you haven't got the program, by the way, in here. Many of you have. And it's quite important that we talk about this. Philip, we've got green and red signals all the way across there. As you can see, in an uptrend, we've got red signals. And in a downtrend, we get green signals. Now, the best place to short on the signals, if you're in a downtrend, is when a red one appears. Would that be correct?
Yes.
And yet you do get a lot of green ones sometimes.
You do.
Okay.
What you have to remember with the computer is good at logic. It's excellent at logic. The human brain, however, is much, much more clever than a computer. And the human brain can see a great deal more than a computer can. Now, when the computer puts a signal up, it's looking at the immediate area around where the signal is. But it can't do what the human brain can do and look back over the 40 or 50 bars. Because actually, to try and program that into the computer, you'd use up so much memory capacity that it wouldn't be possible to do it.
Correct.
So you have to use the computer for what it's good at, cold logic without any emotion, and use the human brain for what it can do well, which is to look at all the background and put everything together and do millions of calculations in very, very quick time. The human eye can see so much more than the computer can.
Well, of course, and it's like, when you look at a mountain, for instance, and you're standing underneath the mountain, you'll see lots of things on that mountain, and your brain puts them into context.
Yes.
It might see snow, it might see a river running down the side of it, but it puts everything into context, and a chart is much the same. We put everything in context, but trying to get a computer to do all the work, which of course I'm sure there are programmers out there desperate to try and put all these things together. You and I at the moment will be working on a scanner which does scan for more than 3 bars, and we'll see how we get on with the computer on that. But the bar next to this bar here, Philip, after we've seen the supply, the next bar closing down, would you describe that as an upthrust? I'm sure the signal would be an upthrust.
Yes, I would.
You would. Can you explain why that is a really good example of an upthrust there?
Well, an upthrust, the high, Tom, I'm sure would agree with this, the high of the bar of the upthrust must be clearly higher than the high of the previous bar.
Which it is. Which is this
and
bar
it
here.
should close near the low.
Which it does.
So with an upthrust, you should have the high above the high of the, clearly above the high of the previous bar.
Yep.
And the close
Yep.
should be towards the low part of the, or the bottom part of the bar.
Can you repeat that? So this is an important part. We're going to talk about upthrusts, but there's certain criteria, and just mention those two again. So the high of the upthrust bar,
Yes.
which is the top of it, we're not talking about the close now, the top of the bar,
That should be clearly higher than the high of the previous bar.
Right, well that's definitely there on this example. And the closing price should be on the low of the bar.
Yes.
Does it matter
Or
whether
near
it
the
closes
low, yes.
low? Yeah, does it matter whether it closes level with the bar behind it, or lower or higher, or does that not have much relevance?
Well, if it closes higher, it's an ordinary upthrust, what we would normally talk about as an upthrust. If it closes lower, it's called a hidden upthrust.
Right here, yeah.
Now, normally, when we have a down bars are normally strength. But in this case, because the high of the bar is higher than the previous bar, that means that there's hidden weakness in there, because it's tried to go up and it's collapsed down towards the lows. Now, if it closes as it has, that one is a down bar, I think, isn't it? Just
Yes.
about. If
Yeah.
we assume it is a down bar anyway.
So that one would be a hidden upthrust.
That would be called a hidden upthrust.
Let's just be clear for Erica
Yes.
there. Yeah, definitely. This one here, where I'm pointing. Oh, sorry. There you go back. This one here, after this bar, this widespread up, is a hidden upthrust because it's closed lower than the bar behind it. Yep.
Yes.
Good. And then we have other principles as we go down. Look, no demand and another upthrust on pretty low volume. But we're going to be talking about those shortly. Okay. So this is another one that you picked out of a UK stock, which is again a good example here of no effort to rise from a big result and trying, and it's British Airways, which is currently in the news, of course,
Yes.
for strikes and losing money. Do you want to talk us through that one, Philip?
Well, there again, at bar A, you've got a big push up. There's effort. You can see we've got an old top to the left over there as well. They're trying to push up through that old top to the left, and that's why you've got this big increase in volume. But for me, actually, that increase in volume is actually too great. That's really ultra high volume. And the fact it closes down in the middle shows there must be a lot of supply on there as well. And if we look at the next bar, which is B, that's actually an upthrust again.
That's not hidden. That's a real upthrust.
That's a
correct?
real upthrust because it's closed as an up bar. And again, you've got the high a good deal higher than the previous bar's high. Now, it's tried to poke up through that high to the left, the old highs to the left, and it's failed. It's come right back down. It's closed in the bottom half of the trading range towards the lows. And you can see again the volume is very high on there, so there's a lot of selling going on there.
And bar C confirms that, correct?
And bar
Philip?
C confirms it.
So you've got
yes.
a three bar setup here. It's at an old top. It's an effort to rise, but actually, the best place to short it. Although I know Tom would say probably if he saw that he would take that, and certain VSA experts would, Philip.
Well, I think actually if you look at bar C, if bar C had actually closed as an up bar there rather than a down
Would have
bar,
been even stronger.
it would have been an even stronger one, because that actually is really, C is really no demand. If it was a slight up bar there,
Yeah,
I would still actually class that as no demand.
I like
but,
that entry there, Philip.
that's a better
That's
one.
the bet one.
That's
See,
a
so you've
better
got
one.
this in the background. You trend up, you go up. As the market goes up, it pushes up. It goes up here, but there's very little volume, and the next bar's down. And I'd have a sell order just underneath here because of the weakness here. That would be a very strong entry.
Just to clarify, actually, on bar C, what you've got there is a push up, and the low volume tells you that nobody is interested in pushing prices up.
Yeah. Well, you see here, this is a great example. Look at the volume here as we decline below the average. So here, 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 and here. Now look what happens to the price. Higher, 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 higher on declining volume in a downtrend because you've got weakness here. That's all you've got to look for, ladies and gentlemen. This is not rocket science. It really isn't. You see serious signs of weakness, the market collapses, then it goes back up into the weak area and the volume declines. I think Tom talks about the smart money sending you a telegram. And they say, well, there it is. There's your telegram. Your bus has arrived.
Very often they do that.
Yep. If you can read the chart.
Very often, yeah, you see the serious sign of weakness, and then they're very decent lot. They say, right, we better tell them that we've definitely, you're in a weak market, so let's give them an up thrust, or let's give them an up bar on no demand. That should satisfy them.
Well, if you can read the chart.
Yes.
And usually VSA will come up with an automatic signal. Don't forget, these signals are automatic with no intervention from any human beings whatsoever, and there's no mathematical formulas whatsoever within this program.
Well, you can see here we've got no signals on this chart, and several of our charts we're only reading the bars. It's almost like learning to read a language, and that's really what we want to get you
Which
to
is a
today.
language, isn't it?
Well, chart reading, I found, I mean, it's almost like if we could invent you get these getting VSA for dummies or something like that, or
Yes,
you
it
get
is
these
a language.
You get these courses. I forget the name of the company that does them. There's several of them, but Rosetta Stone, I think it is. It's almost like they said that I read a promotional material for this thing, and they said, you've got to almost go back to being a baby and starting to learn stimulus, visual stimulus and stuff. Well, charting is very much about patterns that will definitely be there. And the reason, as I'm going to show you later, I was so confident in front of a big audience, and I've done it all around the world, to take positions live with real money. And as Tom said, in the Gladiators case, because I know that I'm not going to take the trade unless I do get a really good setup. Doesn't mean I don't make losing trades, everybody does. But the point is, when we see these setups happening, as we see here, and let's just really reaffirm this, widespread up bar, an up thrust, not a hidden one because it's closed higher. The next bar closes down, confirming selling in both bars, and the market falls. As the market rallies back into the area where the closing prices of that bar, which was the highest volume bar, I call it a trigger number, as I'll show you later, the volume is actually declining into the up move, and when that bar closes down, that is where your sell order is. And all I would be doing, as this market's going up on low volume, I'll be putting sell orders in below each bar as it goes up until it takes me in, because I know I've got weakness in the background. That is a great setup to go to. Okay, so let's summarise on shorting after you see no effort from result. Hold on, Janet's got a quick question there. And actually, if you've got questions on that now, let's take them while I summarise it. He said, Gavin, she said, would you have drawn a line across the close of... Oh, yeah, absolutely. That's what I just said. Yeah, let me be clear. You'll see this shortly. This is the highest supply bar on the chart. I always mark the closing price and the high sometimes, but the close is the key. We call it a trigger number. If you put a line across there to there, you'd see we'd be approaching that close on no demand. That's very high probability short. Very high. Okay, and then if you drew a trend line, you'd find you'd connect the two, and you'd find all the way down here, I think this stock continued to go down for a while, that you'd be able to short at the top of the channel and buy at the bottom if you wanted to in a downtrend, which I don't recommend. But that really brings, as Janet, who's been on several of our courses, sums it up, this really brings the no demand bar to life. Now, how do you bring a bar to life? You resuscitate it, I suppose. I don't know. You bring it to life, though, in a VSA perspective. That's Sebastian's term. He says you bring it to life because it's there, because this is behind you, which is why background is vital in your VSA analysis and is vital to you becoming a professional chart reader. I can't stress that enough. Philip, what did you find the most difficult part of the concept of VSA?
Probably belief.
Oh, that's interesting.
And I think that's probably what most people find, is actually believing what you're seeing on the chart.
Yeah.
Because you can look at the chart a number of times if you don't believe it.
Yeah. I have to say, I will be honest, Tom said to me several times, I've looked at the chart, I've got my rules that I follow, and he said, well, look at that, that's obvious. And I'll sit here and wait. Not so much now, I'll pull the trigger, but I used to sit and wait, because I used to think, now Tom, no, what happens if that, what happens if that? And as soon as it went and did it, and I lost 4 points on the S&P, he said, well, I told you. Well, after 6 or 7 times of him saying, rubbing my face in it, well, I told you, I began to start thinking, well, look, I need to put a set of discipline rules around this that don't restrict me, but keep, protect me when I'm losing money, but make sure I make winners. Now, Tom, you said you've seen me trade. You said one of the strengths is that I'll cut a loser fairly quickly.
I think you're going to make probably one of the best traders in the world because you're not frightened to go in at the right time. But the main thing is that if you happen to be wrong, you close the trade out immediately, which is the thing that good traders must have. They must be able to close out a losing trade immediately.
But human beings don't like to lose money, Tom.
No,
and I'm a human being. Now, I must admit, I learned very quickly that to protect your capital account, the good traders that I've met all over the world, and because my brother-in-law is a trader on the floor of the exchange, and I've met many good traders there, they are able to see immediately when they've made a mistake in their analysis.
Exactly.
Now, Philip, do you make mistakes in your analysis?
Of course I do. Of course I do, yes.
But you're an expert. You've been doing this 20
Still
years.
do it.
Oh, so you're human as well.
I'm human.
Tom,
But
do you
again,
ever, I've never
cut
seen.
your losses.
I have yet to see Tom make a mistake in his analysis yet, and I've been dealing with Tom for 8 years now. You seem to have it. Why is it, Tom? Your analysis is spot on. Is it because you invented this?
No, it's because I look at the daily chart first carefully, and usually you can see weakness creeping in, or strength is obvious if you get a test of the rising market and so on, and where you are in the trend, what have you got in the background. That all adds up. And I suppose you're right. Very rarely am I wrong, and I'm not boasting. It's just the fact is I've learned to read the chart. And having to make up all these rule sets and try to plug it into a programmer. I mean, I've had 8 programmers with me over the years. It's cost me a lot of money, and they work for you for 8 months or so, and you don't get anything out of them because they don't understand it. But I do have one programmer who lives in Devon at the moment, and he's very, very good.
He works for us now, yeah.
He works for us. I've always kept him really going in a way because he seems to understand the concept.
Yeah, and I agree with that. Now, let's summarise now, as there's no more questions come in. Belief, though, Philip, everybody typed in, yes. Seems to be a fit. And yes, what's great to see on the survey, everyone believed they could make money. And hopefully, by the end of this seminar, they'll go and do it and believe in what they see. So, shorting after you see no result from effort. This will usually appear in an uptrend, okay, so be careful. But it's far more powerful when you see it in a downtrend. Do not short in an uptrend. Really don't want to do that. If the market is weak, it will roll over, as we've seen in the mushroom, okay, and you will see further signs of weakness, okay. This is a powerful short when there is a downtrend in place, and you see this at the top of a trend channel.